So in this video, I'm going to be sharing 8 secrets about mortgages and the home buying process that 99% of first-time home buyers don't know about. The home buying process can be a very intimidating and even confusing experience, but with the proper guidance and information, it can be a smooth and simple process. So by the end of this video, you have an idea of what to do, what not to do, what it takes to buy your first home, and also a few tips and tricks to make the process faster and smoother. And if you're new to the channel, my name is Enrique. I'm a mortgage loan officer in Southern California, and I make videos on first-time home buyer education and real estate. So if you enjoy these types of videos, make sure you subscribe for more content just like it. All right, so without further ado, let's get started. All right, number one is getting a soft pre-approval. Now, before I go over what that is, I'll go over what a pre-qualification is and what a pre-approval is. That way you guys kind of understand the terminology between those two things because they're often confused. So a pre-qualification is when you get into communication with a loan officer and you tell them, hey, I make this much money, my credit is X amount, I have these many debts, and I have that much money in my bank account. And based on that conversation or that information, the loan officer will tell you, hey, I think you qualify for X amount. So it's more of a guesstimate, a pre-qualification. It's not really backed up by documentation. And that's why it's not really recommended that you just have a pre-qualification when you're out there shopping for homes, or even in my opinion, just have a pre-qualification when preparing to buy a home, because it's just based on conversation. The next one is the pre-approval. So the pre-approval is a lot more solidified because that's where the loan officer actually goes through your documentation, your income, your tax returns, your W-2. They do a hard pull on your credit so they can see your credit score, all your debts. They take a look at your bank account. So it's a full picture of your scenario, and this is what's typically required or needed or asked for or recommended when you're out there submitting offers on homes, because you'll know exactly what you qualify for. Hey, I qualify for X amount, for this program, for this interest rate, this is my cash to close, etc. So that's a pre-approval. Now, the reason I recommend soft pre-approvals is because this is where a loan officer will still take a look at your documentation, your tax returns, your W-2, but instead of doing a hard pull on your credit score, they'll do something called a soft inquiry or a soft pull, where it won't bring your points down, because typically when you do a hard pull on your credit, it drops you a few points. Doing a soft pull doesn't do that. It's typically free, doesn't hurt your credit score, and you're able to get a pretty clear picture, if not identical to a pre-approval, without any obligation, and again, without hurting your credit score. So this is something I highly recommend, whether or not you're planning to buy in the near future or not. Maybe you're planning to buy in 2 years, 3 years, 4 years, it doesn't matter. I highly recommend getting a soft pre-approval with the loan officer. This way they can see the full picture and tell you whether or not you qualify for or what you can work on leading up to your home purchase. So this is the first thing I recommend anyone looking into buying a home, is get that soft pre-approval. So reach out to a loan officer in your area, reach out to myself in California, and ask us about doing a soft pre-approval. If they don't know what that is, simply explain it's when you go over my documentation but only do a soft pull on my credit. All right, number 2 is getting or asking for an application summary once you do your soft pre-approval. Now, an application summary is essentially where a loan officer will give you a brief summary, a brief explanation as to their findings for those 4 parts of the mortgage application: the income, the credit, the debt, and the assets. So what I'll do with every single one of my clients when I do a soft pre-approval is I'll send them an email, and I also go over this with them on the phone on my findings for their income. Hey, here's a summary of my findings for your income, XYZ, the income's looking great, or hey, we need to increase the income, or we need to do XYZ. Next up, the debts. Hey, here's what I found for your debts. We need to work on this, or maybe everything's perfect. Then the next thing, your credit. Your credit score is excellent. We don't need to do anything, or maybe we need to, increase the score by 20 or 30 points. Same with the assets. So it's basically going to give you a deeper understanding as to why you qualify for, and also what you can work on to put you in a better position to get better terms when you are ready to buy your home. So make sure that you ask for this application summary to your loan officer. This way you can better prepare yourself, because oftentimes, loan officers will just tell you, hey, you qualify or you don't qualify. And that doesn't really help out, because you want to be put in a situation where you can better your condition. And in order to do that, you need to know, hey, what can I better? what is going on with my debts or my credit or my income. So make sure you also ask for an application summary when you're getting that soft pre-approval, and if the loan officer doesn't know what that is, simply state it's a brief summary of what you found for my income, my debt, my credit, and my assets. All right, number 3, now I want to go over what truly is one of the most important parts of the application that most people don't consider or know about, and that's going to be income. So mortgages are very different than, for example, auto loans, where when you're going to buy a car, they're mostly going to focus on your credit score. Whereas when you're buying a home, one of the most important things is your income, because your income is going to determine the size loan that you qualify for. When there's more income, there's more loan. When there's less income, there's less loan. One time I was asked, hey Enrique, I have an 850 credit score, a perfect credit score. How much do I qualify for? Well, even though your interest rate does have a part in your qualification, your income is going to be the most important when determining the size loan that you qualify for. So this is something that a lot of people don't know. They think, hey, I need to have great credit to buy a home. And although that is true, credit is important. One of the most important, or more important than that, when determining the size loan that you qualify for, is going to be your income. All right, number 4, this is something that a lot of first-time home buyers are surprised about or don't know about. And that's that when there's more than one person on the mortgage application, the bank for the most part is going to use the lowest of your middle scores. Meaning if I have a middle score of 720, right, they're not going to choose my highest or my lowest score, they're going to choose my middle score. And I'm buying with my partner, or let's say a sibling, and their middle score is 600, the bank is going to use the 600, not my score. Again, this is different than when you're buying a car. When you're buying a car, let's say I'm buying a car and my credit score is 700 and I want my dad to co-sign and he has an 800, the bank's going to use the 800 on the application, whereas for mortgages, they're going to use the lowest of the middle scores. So you want to make sure when you're preparing to buy your first home, anyone that's going to be with you on the application has a great credit score, because you can have the 800, your partner can have the 800, and if you're going to be buying that home with, let's say, your sibling and they have a 600 or a 580, the bank's going to use the 580 or the 600, not your 800 or your spouse's 800. All right, number 5 is understanding the difference between a direct lender and a mortgage broker. So a direct lender is essentially someone that works under one bank, a loan officer that works under one bank, and they're going to be limited to the interest rates and even the programs that that bank offers. Typically, a bank will offer or have maybe 5 or 7 different programs, whereas a mortgage broker, on the other hand, I'm a mortgage broker, is someone that has access to multiple banks, and so it can get you into more programs, higher possibility of you getting qualified, and also get you lower interest rate. At my company, we have access to over 150 banks, so the higher chance of getting you qualified, etc. So that's something to know when you're out there shopping for a mortgage, is whether or not you're working with a direct lender or a mortgage broker. Because let's say you're working with a direct lender and they're like, hey, you don't qualify. You already know, okay, hey, let me try working with a mortgage broker because they have more programs, more banks. I may qualify with them. I actually used to be a direct lender, and the reason I left was because of that. I was getting a lot of clients that weren't qualifying with me, but when they went over to a mortgage broker, they were able to find a program quickly because they had more banks, more programs to offer. So that's another important key point here when you're out there shopping for a home, is who you're working with, because you may be told by the direct lender you don't qualify, but if you were to just go over with a mortgage broker, they may tell you, hey, you do qualify. I have the program, no problem. All right, number 6 is to always ask your loan officer for multiple quotes for multiple programs. Because you may think X program is best for you at X interest rate, and the loan officer most of the time is going to give you that. One thing that I do is I always do this. I always give multiple quotes for different programs, because I've had clients where they've told me, hey, Enrique, I want an FHA loan. That's the best one for me at 3.5% down. But I show them another quote and they're like, oh, I didn't even know that existed, and I like that more. So you may think that X program is great for you, but when the loan officer shows you all the ones that you qualify for, you may be like, oh, hey, I didn't even know this one existed, and I like this one more. So don't limit yourself to what you think is good for you. You know, similar to when you're going to a doctor. You may tell the doctor, hey, my ankle hurts, I need this medicine. And then the doctor, after doing XYZ tests, doing x-rays, scans, all that good stuff, they're gonna be like, oh, actually, it's this that you need. Actually, it's that's wrong. So you may not know what exactly might be the best program for you. Doesn't mean that FHA 3.5% that you want isn't the perfect one. Maybe it is, but you still want to see the full spectrum of programs and quotes that you qualify for because it may or may not be the right program for you. There's plenty of programs out there, plenty of different quotes and ways that we can structure a deal. So make sure you also ask your loan officer, hey, send me multiple quotes for multiple programs. All right, number 7 is understanding down payment assistance. So down payment assistance, there's a lot of programs out there. They're all great, but it's important to know how they work and the different types. So the first type of down payment assistance, which is the most common, is the one that is going to be a loan, meaning they're going to give you $30,000, $50,000 for your down payment, but when you go to sell or refinance the home, you have to pay that money back. So most, I would say maybe 80 to 90% of first-time homebuyer down payment assistance programs are going to be a loan where you have to pay that money back. The second type, which are less common, are forgivable loans, meaning they're going to give you money, and if you do XYZ, they'll forgive the loan and you don't have to worry about paying it back. And the third one, which is the best and the ideal, is a grant. This is where they're going to give you the money, $20,000, $50,000, whatever the amount is, and you don't have to worry about paying it back. Now, another thing about these down payment assistance programs is that for the most part, all three of these are going to come with the higher interest rate. Not all the time, but from what I've seen in my experience, they all come with the higher interest rate. So that's another thing you need to consider, because a higher interest rate means a higher mortgage payment, and also that you're going to qualify for less. There's programs that can be maybe 1% or 2% higher than the interest rates that are at market, meaning you're going to qualify for a lot less. So these are a few things to consider or ask about if you're looking into down payment assistance programs. All right, number 8, this is a little tip or a little hack, is that if you're buying multi-units, you can actually use 75% of the rental income to help you qualify. So if you're buying like a 2-unit property, a 3-unit, or a 4-unit, 4 units would be the maximum. After that, it's considered a commercial property. Let's say you're buying a 2-unit. You're going to rent one and live in the other. And you can rent the other one for, let's say, $2,000. We take 75% of that, which is $1,500, and we add it to your income on the application. And like we talked about earlier, when there's more income, you qualify for more. So this is a nice little tip or trick that you can utilize if you are looking to qualify for more and also looking to buy multi-units. So that's pretty much it for today's video. Hopefully you guys enjoyed it. If you guys have any questions, reach out to me. I'm happy to help. Also, comment down below what you guys thought. Leave a big thumbs up and subscribe for more content just like this. I make content for first-time homebuyer education, real estate education, lifestyle, self-improvement, and much more. Thanks again. See you next one, and be great.